Following the financial fraud scandal involving Evergrande, PriceWaterhouse Coopers is reportedly facing a wave of contract terminations from multiple companies in China. Chinese media reports say this could cost PwC around 561 million yuan in audit revenue, cutting its income by two-thirds compared to last year. Having already been involved in a financial scandal, PwC has now come under fire for mass layoffs. On Chinese social media platform Xiaohongshu, many users are sharing farewell messages as they leave PwC. One post mentioned, "There are so many people leaving PwC today that it feels like a party." Job-seeking platform Boss Zhiping shows numerous former PwC employees actively looking for new positions. PwC responded to the layoffs by saying, "Due to the changes in external factors, we have adjusted our organizational structure in line with market demand." In fact, PwC's Guangzhou office has been laying off staff, mainly in the audit department. There are less cuts in other departments. An employee from the Guangzhou audit team said many people were let go due to business restructuring. Employees from other regions also confirmed layoffs. The Beijing office lost many employees after losing banking clients, and Shenzhen's financial team faced heavy cuts as well. A Xiaohongshu user from Beijing noted that layoffs have reached staff at the Associate 2 level. PwC's Shanghai office has also been in the spotlight for implementing career breaks. One employee from the audit team said they were told to take 120 hours of so-called career break while receiving 20% of their salary. This applied to regular employees and managers alike. Another employee said not just the audit team, but the financial team was also affected. They added it's rare for the company to initiate career breaks, which are usually applied for by employees themselves. The risk consulting department was also notified of these breaks, which usually happens when there are no projects. In addition to layoffs, two sources told Reuters in July that PwC asked its highest-earning partners in China to cut their annual income, including salary and bonuses, by half. Other partners' pays would be reduced by about 20 to 40%. PwC's website showed that, as of last September, it had 781 partners in China. One source said senior partners at PwC China earn at least 5 million yuan, about $690,000 annually, while mid-level partners earn between 2 million and 3 million yuan. Junior partners start with around 1.5 million yuan a year. Several interviewees told Chinese media that PwC lost many audit clients after its involvement in the Evergrande financial fraud scandal and internal whistleblower complaints. This, they said, is a major reason for the recent layoffs. On March 18, 2023, Evergrande Real Estate Group announced it had received a notice of administrative penalties and market bans from the China Securities Regulatory Commission, CSRC. The CSRC decided to impose a lifetime market ban on Evergrande's chairman, Xu Jiayin, and vice chairman, Xia Haijun. It also ordered Evergrande to make corrections, issued a warning, and imposed a fine of 4.2 billion yuan. This penalty notice revealed that Evergrande committed financial fraud by recognizing revenue prematurely, inflating its total revenue by 564 billion yuan in 2019 and 2020. It also exaggerated its profits by 92 billion yuan. In addition to the 4.2 billion yuan penalty for Evergrande, Xu Jiayin was personally fined 47 million yuan. Since Evergrande's listing in Hong Kong in 2009, PwC had been responsible for its auditing. Up until 2020, for 12 consecutive years, PwC had issued an unqualified opinion audit report for Evergrande's annual reports. This signaled to investors that, in PwC's professional opinion, Evergrande's financial statements accurately and fairly represented the company's financial position and performance, with no major issues. Regarding the Evergrande financial fraud case, many believe PwC failed in its audit duties. This allowed Evergrande's debt crisis to go unnoticed for a long time, which misled investors. According to Chinese media, the investigation into PwC's involvement in the Evergrande fraud is almost complete. The draft penalty notice reportedly uses harsh language to reflect the seriousness of PwC's actions. PwC is said to be negotiating with regulators over the wording of the penalty notice to reduce its negative impact. Two sources indicated that the timing of the official announcement of penalties is still unknown, but judging from the preparation of the regulatory authorities, it might be released soon. PwC is one of the largest auditing firms in China, with about 110 Chinese-listed companies as clients. Alongside facing heavy penalties, PwC's business in China has suffered as many major clients have canceled their contracts. By July 24th, 30 out of 107 A-share clients had canceled their contracts with PwC, and 6 newly acquired clients from the China Merchants Group also switched firms. A rough estimate shows that these 36 clients account for over 600 million yuan in audit fees. This represents more than 70% of PwC's A-share client audit fees in 2023. Among PwC's Hong Kong-listed clients, nearly 30 companies have canceled their contracts. These terminations involve about 200 million yuan in audit fees, based on 2023 figures. PwC began to lose tens of millions of orders from large clients in late May, and the domino effect has been triggered ever since. On May 27th, China Merchants Bank announced that it would switch to Ernst & Young as its auditor for 2024 after 8 consecutive years of using Deloitte, reaching the Ministry of Finance's maximum limit for continuous appointments. However, in September 2023, China Merchants Bank had announced plans to appoint PwC as its auditor for 2024. The bank didn't specify why it ultimately chose not to proceed with PwC. According to a previous announcement, China Merchants Bank was expected to pay PwC 27.5 million yuan for its 2024 audit, making it one of PwC's larger clients. In fact, PwC not only lost China Merchants Bank, which had planned to appoint them for 2024, but also 8 major A-share clients it had already worked with in 2023. On May 25th, China Railway Group announced it would cancel its contract with PwC and switch to Deloitte as its auditor for 2024. China Railway explained that it made this decision based on its current business situation, development needs, and overall audit requirements. It also considered Deloitte's performance, audit quality, service levels, and fees. According to China Railway's 2023 annual report, the company paid PwC 37.1 million yuan in audit fees. However, after switching to Deloitte, the audit fee for 2024 dropped to 25 million yuan, saving the company 12.1 million yuan. Data from Wind shows that in 2023, PwC had 107 A-share clients with a total audit fee of 963 million yuan, including fees for internal control audits. PwC's top 8 clients included Bank of China, China Life, China Telecom, PetroChina, PICC, China Railway, and Shanghai Pharmaceuticals. These clients contributed combined 505 million yuan in fees, making up more than half of PwC's total audit revenue from A-share companies in 2023. All 8 of these clients have now ended their contracts with PwC. The biggest loss for PwC came from Bank of China. On June 7th, Bank of China announced changes to its partnership with PwC Zhongqian and PwC Hong Kong. Instead of a full-year engagement for 2024, PwC would only handle the bank's mid-year financial review and related services. Initially, Bank of China was set to pay PwC 101 million yuan for a full-year audit in 2024. After the adjustment, PwC's fee dropped to 35 million yuan. In 2023, PwC received 193 million yuan from Bank of China, the highest audit fee among PwC's A-share clients. PwC's challenges go beyond client losses. According to real estate media Guanjian, creditors are preparing to sue PwC for errors that led to financial losses. Liquidators are taking steps to protect their right to file claims against the audit firm. Suing audit firms has become a common method for creditors to recover losses over the past decade. Under Hong Kong law, liquidators usually have 6 years to file a lawsuit after suspected misconduct. Reports indicate that Evergrande's liquidators, Edward Simon Middleton and Huang Yongshi from Alvarez & Marsal, are preparing to sue PwC as Evergrande's auditor. They have reportedly begun discussions with at least 2 law firms about the possibility of filing the lawsuit. This move has shaken the market and is seen as one of the boldest actions taken by the new liquidators. If Evergrande's liquidators do file a lawsuit, it could be one of the biggest reputational crises PwC has faced in recent years. PwC has previously faced heavy penalties around the globe. On August 16th, the UK Financial Conduct Authority FCA, fined PwC £15 million. The firm failed to alert regulators to potential fraud at London Capital and Finance before the company collapsed, causing huge taxpayer losses. This fine reignited the debate over how much responsibility auditors have in detecting and reporting potential fraud. The FCA noted that PwC identified significant issues during its 2016 audit of London Capital and Finance, a company that collapsed in early 2019. LCF's collapse caused investors to lose money on unregulated mini-bonds, forcing UK taxpayers to cover about £120 million in compensation. Earlier this year, the FCA banned one of LCF's former directors and imposed a fine. The regulator said a senior LCF employee had been aggressive against auditors and provided PwC with inaccurate and misleading information. The FCA stated, LCF's actions and PwC's own work on the audit led PwC to suspect that LCF might be involved in fraudulent activity. PwC was duty-bound to report these suspicions to the FCA as soon as possible, but they failed to do so. PwC responded by stating that the FCA acknowledged the auditors had not engaged in any wrongdoing at LCF. PwC added, "We have reached a settlement with the FCA to resolve an unintentional reporting breach." In July 2018, PwC was fined $625 million in the United States, settling a record for the largest penalty ever imposed on an accounting firm. The fine stemmed from the collapse of the mortgage company TBW, after which the FDIC sued PwC. The lawsuit accused PwC of failing to detect fraud during its audits of Colonial Bank, which was involved with TBW executives in a scheme that led to massive financial losses. The FDIC saw $5.5 billion in damages, and the court ruled that PwC must pay $625 million in compensation to the FDIC. Looking back, 23 years ago, the Enron scandal led to the collapse of the accounting firm Arthur Andersen. The firm was held both criminally and civilly responsible for financial fraud. This case remains a landmark in U.S. securities history, as it reduced the Big Five accounting firms to the Big Four. Interestingly, PwC benefited from Andersen's downfall, gaining many of its clients, employees, and resources. It's important to note that both Arthur Andersen and PwC are globally recognized auditing firms with over 80 years of history. However, the Enron scandal led to Arthur Andersen's collapse. In some ways, PwC benefited from this, as many of Andersen's clients, talent, and resources moved over to PwC. Now, 23 years later, history seems to be repeating itself. PwC is now facing a similar reputational crisis as Andersen did. As PwC loses major contracts, 3 other global accounting firms are emerging as winners. Out of the 34 companies that left PwC, 9 switched to Ernst & Young, 8 went to KPMG, 6 moved to Deloitte, and a few chose domestic firms. This isn't the first time foreign accounting firms have been caught up in audit fraud scandals in China, but this one is having a much bigger impact. In March 2023, China's Ministry of Finance revealed the results of an investigation into Deloitte's audit failures related to China CITIC. Deloitte was suspended from operating its Beijing office for 3 months and more than 210 million yuan. This was the first time the ministry had imposed a fine of over 100 million yuan. Deloitte's headquarters was also held responsible. 2 accountants who signed off on the audit report had their licenses revoked. 12 other employees were suspended or received warnings. Deloitte released a statement insisting that neither Deloitte Huayong nor its Beijing office had engaged in dishonest behavior. It also claimed there was no need to amend the audit report. "We fully cooperated with the Ministry of Finance's investigation. We respect and accept the Ministry of Finance's penalty decision. We regret that, in this matter, the Ministry of Finance considers certain aspects of our work below the required auditing standards," the statement said. Industry experts confirmed that Deloitte's business operations were not significantly impacted by the penalties. In Deloitte's case, the 212 million yuan fine roughly equaled the total audit fees it had earned from China CITIC over the years. According to China's certified public accountant law, illegal income can be confiscated, with additional fines to 1 to 5 times the amount applied. Deloitte's penalty was for serious deficiencies, not intentional fraud. The severity of the penalty depended on how the final ruling was framed. How much revenue did PwC earn from Evergrande over the past 14 years? Data from Wind shows that PwC collected around 270 million yuan in audit fees from Evergrande. If the penalties are based on the 1 to 5 times rule, PwC could face fines ranging from a minimum of 270 million yuan to a maximum of 1.35 billion yuan. Currently, the penalties for PwC have not been finalized. Rumors suggest PwC could face fines of up to 5 billion yuan and a 6-month suspension of its mainland operations. This suspension would include a ban on accepting new clients and signing audit reports for Chinese companies. If confirmed, this would be the harshest penalty ever imposed by China's Ministry of Finance on an accounting firm. It's also important to note that Hong Kong regulators have started their own investigation into PwC. Recently, an anonymous letter from a group of PwC partners circulated on social media. On April 19th, Hong Kong's Accounting and Financial Reporting Council, AFRC, announced it would investigate PwC's role in auditing Evergrande's accounts. The letter raised concerns about PwC's quality control system and potential deficiencies in its audit of Evergrande. Given the seriousness of these concerns, the AFRC felt it was necessary to launch an investigation. Industry experts believe that if PwC is fined by mainland regulators, Hong Kong regulators may follow suit with their own penalties. This means PwC could face punishments in both regions.